So as I'm telling you, you can see a trend line, but trader A will call it a trend line and it will wait for the breakout to take a trade. Okay, this is trader A. Okay, let's imagine this is trader A. But the second trader was waiting for price to reach this level. Why? Because this level is the level of support. Okay, for him, until the price reach here, it doesn't take a trade. So now this trader will take a buy. Okay, this one will take a buy. This is the second trader. Okay, and then you have the third trader who trades support, supply and demand, was waiting for this expansion to get retested, and then he had like a fair value gap somewhere here. Okay, and from this fair value gap, this guy took a trade earlier, and then I need to change colors so you can see the different traders. This one took a trade here, and he was waiting for price to break this level and take another trade here, another trade after the fair value gap. Okay, you see liquidity, and then you take the trade here. Okay, why am I showing you this? You have different styles of trading. First of all, you have this one. He took this trade, made some money. This one, good. Okay, secondly, this one came in. Okay, next this one came, but before all this one also took a trade. Now if I divide my days, the vertical line, let me put a vertical line here. Okay, put a vertical line. First of all, let's call it like this: 1, then 2, then 3, then 4. Now this is Monday here, Tuesday here, Wednesday here, and Thursday here. Okay, Friday, no trade. Good. You can see here, whatever we say, all of them were right. All of these traders were right, but they don't trade the same thing. They don't trade the same strategy. They don't trade the same entry level. They don't target the same level. Maybe this guy here can target more because he's taking the big move on Thursday. Maybe this guy here also can take some trade, but if he stays longer, then he's gonna be stopped out. So he must have a shorter term trade, so like a scalp. Okay, maybe this guy here always trade on Wednesday because he waits for entry. Okay, and then we also have this guy who trade on Monday and want to catch the highest point of the week. Okay, he caught it here, highest point, and then he get out. All of these traders are right. The only one thing is you cannot be all of them. You can't be all of them. This could be me, this could be Linda, this could be Nedu, this could be Amber's, this could be Angela. Another, you cannot pretend that you could be all the traders. This is the first psychology trick you must have. You are not all of them. So you are not gonna take all the possibilities and all the opportunities that you see on the market. It's probability game. This guy took 2 trades. Okay, now the second factor. So the first factor that you should write down is the trading style. Trading styles mean, let me put this in capital letter, like a bigger one. The trading style gives you insights about few settings, parameters. So you have, first of all, the duration of the trade. Okay, so sometimes people say, okay, I like scalping or I like swing trading, but why? Why do you choose it? Just because you feel it or you feel like it? No, you have to understand why your trade have to last 2 days or 1 day or 1 hour. Everyone could just take a trade and expect to make millions in 5 minutes. Everyone could do that. But you must understand the difference about the durations of trade, because this will define how long your active trade will be running. Okay? And only this will define who you are on the trading platform. When you're trading, you should know what is the duration of your trade, because sometimes you take a trade on Monday and then you keep praying for it to go, like, okay, I'm expecting my trade to go from Monday, Tuesday, Wednesday. No, that's a dream. It doesn't work like that. You have to know when to enter and when to exit, and that time can be 1 hour, could be 1 day, could be 8 hours, could be 4 hours, or maybe 1 week. And now you see how different times means different styles. Okay? So the duration of your trade will define what is your style. Okay? What else will define the style? I'm giving you the second element. Okay? Second element is the entry confirmations or confluences. This will define also your style, because you can know when to enter, but you don't see your setup. And when you feel like it, and then you tell yourself, okay, I think I can enter now. Don't think. You must have a checklist. You must have confirmation 1, okay, check. Confirmation 2, check. 3, check. 4, check. Okay, maybe you have 2 confirmations that are subjective. If you see them, you can compare on one pair, on second pair, but you must have your checklist. And when your checklist is green, you take the trade. If you lose, it's not your fault. It followed your rules. If it follows your rules, then you are not the one to blame, okay? But imagine if you have a confirmation here, and then you feel like here, and then you feel again. You are trading by feelings. That's not okay, okay? So you should understand that that's also will define your style. The entry confirmation, what do I mean by entry confirmation? I'm going to show you one, okay? And I told you in this series of courses, I will show you 3 ways to enter. I will give one style, okay? Let me write it down here. I will give you one style for scalpers. We will be targeting 1 hour candle. Okay, so after 1 hour, and after 1 hour candle, max it will be 2 hours candle. You must be out of the trade. This will be our scalpers strategy, okay? I will also have another approach for what I call intraday or intra-session. That is actually when you target one H4 or H8, okay? So you have 4 hours of trade or 8 hours of trade, and I will have another one that I call it varies, day trading, the standard day trading, which does like 2 days or 3 days, but I call it day trading, swing trading. It's the same type of entry, okay? And we can expect this to be around 1 to 2 days. So 1, wait, 1, 2. Okay, I got it. 1 to 2 days, okay? 1 to 2 days duration. So when you know, okay, I'm a student, I cannot stay on the chart all day. I can only take I can only have 1 hour to trade, then maybe you should be this guy here. Okay, guy number A. And then maybe another one, you have time, but you have a small budget, okay? And you have to focus on trade that will last all day or inside a session. Then you start in London session, then you end up closing in New York session. Or if you start in New York session, you close before the end of the day. That's intra session, okay? Intraday, you could start in Asia session, and then you take a trade in London session, and then you get out in a New York session. It all depends on how you manage your day and how your lifestyle will define the management of your trading hours. Okay, so you don't choose your style just because you feel like it. You choose your style because you know if you take this style here, you will really have time to execute properly. That's how you choose your style. Okay, on the entry side, I told you I will show you 3 types. I will have the one that I call the breakout and retest. I know everybody knows this, but I have another approach. It's actually the opening price range plus the smart money concept. I will show you how to trade this. Okay, this is you can use for scalper and for intraday. I will show you the supply and demand, SND, so market structure and entry. And I also have the I call it, okay, so my community, they call me Blue Looper. That's why I wrote it here, but I'm trying to change the name to keep it standard for the strategies I'm going to teach you. But it's called the Blue Leopard ECR. It's the ECR, like engulfing candle range, okay? But this ECR, I mix it with ICT concept, and I don't take all of the concept, only the profiling and the daily bias, and I will show you how to trade all this. So these are the strategies I will show you: the ECR entry, the SND entry, the SND entry, and the breakout and retest. So, but before I teach you all this, okay, this was just to define the trading style, but your trading foundation, okay, you must understand 2 main things. Okay, let me show you the 2 main things that you must learn for your trading foundation. Okay, we already know the universe of trading, if you could call that a new universe, but after that you must understand the market structure. Okay, market structure will teach you what I call the institutional, okay, the institutional supply and demand. Okay, when you know the institutional supply and demand, under that point you will understand where are the traps and liquidity pools. I need to move all this. Please wait, sorry, I need to do this. Okay, this is the style, and this for trading foundation. I need you to take notes because I'm writing down, but after that I will start going deeper in the charts. So market structure will teach you the institutional, the S&D, and then you also have the traps and liquidity pools that will help you understand when to avoid trading, where to target, and when to enter. This is very crucial. The second thing for your foundation after market structure, you must understand the formation of a candle. Because if you know the formation of a candle, open, high, low, close, or open, low, high, close, you will know when to expect the move. Okay, this is Sorry, I have to open another one. Okay, this is the foundation to understand the candle. This is the foundation to understand the structure. Simple, nothing more. If you understand these two things here, every strategy people will teach you, or you can find somewhere, you will understand what it means, because it all comes to the same thing. It's all the strategy we see on the internet, they are doing the same thing. It's called price action. If you know the market structure and you understand how the candle form, you already know price action. Why did I say that? Let me show you. This is an example. I'm going to go on gold. Okay. Today I saw there were many trade that we had from the community, and I know you all saw that. We had very nice signals that we could use and benefit from. Okay, so the educators sent the calls, but I'm trying to show you one thing. You can see all the different pairs and instruments that they sent. They are different, right? So it means in one day you can have many opportunities. Okay, this is the benefit of this community actually, because if you wake up at a certain time and then you find a signal that could help you enter at the right time. It's not like other communities where the educators trade only one thing, and if you miss the entry, you missed everything. Here is different. And I was telling you this, if you understand the formation of the candle and the formation and the market structure, it's easier for you to understand what the price is doing. Okay, so we have different level of knowledge that we need to find when we come to analyze the market, when we do the analysis of the market. So the analysis, I'm talking about technical, okay? I'm not teaching you fundamentals. I'm teaching you technical analysis. It's my strongest suit. So I need to teach you what I think I'm the most confident, and also what I have already tested. Technical analysis, okay? Let me show you what are the main points that you look for. You look for the direction, okay, of the market or price, okay? When I call this technical analysis, I mean price action. Everybody does price action. Nobody knows really what's going on behind the algorithm or anything, but you can have the clues if you understand the behavior of price. So price action, it's studying the behavior of price, okay? Price behavior, let me just call it like that, okay? Price behavior. When you have some clues and some blueprints, and you are trying to find different points and characteristic of what price did at what time, you are now defining the behavior of price at certain level. So now you are looking to understand the direction of price. You are looking for the second thing is the time and levels. Times comes first. Why? Because in some cases, when price reach a level but at the wrong time, it doesn't mean nothing. You don't take the trade. You have to wait for the good and the perfect time. The better time to enter, it's the time for you to enter, not only the level. Okay? Some people can reach a level before the markets close and then he says, okay, I need to enter. No, it's not the right time. Why? Because the market is about to close and the spread will be big like this, and then your entry will get stopped out. Even if you're right, but it's the wrong time. So direction is good, time and level. And then another thing is execution. You must know what you're looking for. Your execution is defined if you are taking an expansion, okay? entry for expansion or reversal. Okay? In expansion, we have reversal and continuation. I know why I'm saying these things in this order so you can understand, okay? Everyone who comes in the market want the big move, okay? If you came today, what would you take here on this market? We did the analysis on Sunday, and you all know that we took this trade, and this trade was negative, but we were right on the direction. But I entered on Monday. Monday was not the perfect day. We came here and we got stopped out, but price did exactly what we needed. So you could see how I reached my target. But now today, look at what price did. He swept this liquidity, and now we are having an H4 closing higher. If we look at the daily time frame, you see markets closed bearish. We were supposed to come lower, but as price has reached already this target and created a reversal here that we can see here on H1, price could close here. Now every instrument opposed to the dollar is about to go higher. Why? Because you can see the dollar now is dropping with the news, okay? This is happening in front of you guys. You can see here how price came, swept liquidity. If you are waiting for this sweep and enter on the noon entry, like around noon in the USA, in New York Standard Time, you could have taken this entry here, okay? But why? Another one took the buy here. Like I told you, everyone is right. This guy here took a buy, got out, is right. Now you are entering here, you are taking a sell, okay? And the sell gave you this big move. Who's wrong? No one. But did you take the same trade? Yes. Same instrument? Yes. Same day? Yes. Same session? No. I closed mine in New York session, but you enter a New York session. So you should know. Let me go back here now. The execution is where everything happens, because the execution will tell you what are you looking for. An expansion? Okay. Everyone, let me show you here on the side. This is putting this here. I need to put some order here. Sorry. Now we have. Okay. Let me do this. I'm gonna do this. Put this here, down here. Good. Now put the formation of a candle, market structure right below. I want you to screenshot this, guys. I will now explain to you here on the side what we look for in the market. We have expansion, retracement, consolidation, manipulation, expansion again. Okay, I don't say that it's always have to happen in this sequence. I was just showing you the types of move. So the first move here, expansion. Okay, second move, so I'm going to put an arrow, a red arrow. Let's consider this an expansion. Okay, now second move in blue, let's call this a retracement. Okay, third move, and then we're gonna define the characteristic of every move. We're gonna avoid fancy names, like the simple names. Everybody understand what it means, and then okay, whatever strategy you find on the internet, they can call it the flying goat, or I don't know, Black Panther or blue leopard. They can call it whatever, but the thing is, you know what it means. Okay, so now here you have this move, and then last one. Let me change the color. Let's go for pink panther, and this one, and here, yeah, let's just give it some weight. Okay, I'm going to delete this one now, and then you can see the moves clearly. So imagine you come on the market, you must know what you're looking for. If the expansion is red, okay, then the retracement is green, the manipulation is pink. After this, what can I have? Let me show you another one. Is the brother of expansion. They are the same guy. He's twin brother, but he just have another name. It's called reversal. He does always the opposite of what his brother does. So this is the entire family. So you have this guy. After this move here, after this manipulation, you could have another expansion, and then maybe you could have a reversal. This guy is called reversal. Expansion, retracement, consolidation or range. You have manipulation, which is the guy that always follow consolidation. Maybe sometimes he can follow retracement, but this guy, he's a sign that that expansion want to start. So before every good manipulation, every good expansion you get, you will see there is a sweep, or let's call it manipulation. Okay, so there's one concept you can see everywhere, and that will define how we will think. Okay, it's called AMD, like this: accumulation, manipulation, distribution. Let's just call it differently. Okay, consolidation, manipulation, expansion, or expansion, retracement, manipulation, expansion. You see, so these fancy names doesn't mean nothing if you already understand what the moves are. All you care about is the move. The market doesn't speak, it shows us. So the names and the words and the fancy tags, and it doesn't help. That's why people say, me, I trade this. What do you trade? Okay, me, I trade supply and demand. And you? Oh, I trade order block. It means the same thing, guys. Oh no, mine is different. It has to happen after a fair value gap. Yeah, mine happens after an imbalance. But imbalance and fair value gap is the same thing. Oh no, imbalance is internal liquidity. Who told you that? No, because it has a sweep. Oh, so when you see a sweep like this, oh, okay, so you call this what? Turtle soup. No, it's a bear trap. You see, it's just words. But you have to understand this. Expansion is what we look to trade. We only look to trade expansions. Why? Because they are the bigger moves. Who will want to spend his time here in this consolidation? You'll not catch anything. We are looking for expansions. Whatever time we are in, we are looking for expansion. Okay? So I will just put the acronyms. I have E for expansion. Okay? Then I have R for retracement, but we put RT, so we know it's the guy here. Sorry, it must be green. Then we have next one, consolidation. Okay, and then we have manipulation. Okay, every move you see on this chart, it's part of one of these. And whoever tell you the opposite, just ask him then what that move means. Tell me what the move is. If it's not a manipulation, if it's not a consolidation, if it's not a retracement or an expansion. or if it's not a reversal. So now, at least you can know this and you are sure that every move, I can qualify every move already. That's good. That's the perfect basis, okay? That will help me understand when I'm trying to execute, where am I entering? This already can help you know this is not the right time to enter. Now, I'm going to cycle like this. I'll put a cycle around where we will be the most interest to enter. And I'm going to create, no, I need a proper shape. Let me put this cycle. Where is it? Must be here. Yeah. We are going to be looking at this zone. You know why? Because this guy will help us anticipate this expansion. So, as soon as we find a manipulation, we can smile. Why? Because after one, what do you get here? You see? After another one here on the lower time frame, what did you get? Let me take this red line and just look for manipulations for 1 minute straight. Okay? Where did price manipulate? Here. Okay, what did it do? Next. Now your eyes are seeing expansions everywhere. Okay? Let's take another one. Manipulation here. What did price do? Okay, why? Here, manipulation. What did price do? Down. Okay, manipulation. Down. I don't care if it takes me out. I would take 8 trade and then 7 will be okay. Or 6 or 5. Still, if you have a good RR, you can even take 2 wins and it will save all the account. You need to understand that. At least you have an edge. You have something you are sure about. Because what kills most traders is doubt. I don't know if I have to keep going, if I have to stay in this trade or I have to get out. But now you are going to wait. You're going to be patient with yourself, okay? So now, let's take the break. I told you 40 minutes. I'm going to create the next link. I would like everyone to ask me questions. We're going to take like 15 minutes just to answer the question about what I told you, what I've shown you here. You must understand the trading style, okay? You understand what the trading style is. Then you get what the foundation is, because we are going to spend our time to understand the foundation, okay? Because that's the next thing I'm going to do here. In the second call, I will give you introduction to the market structure and how the candle forms. People say you have to learn trading for 6 months. No, man, I don't think so. I think you can learn it faster. It's only your consistency in training that's what will help you. Okay? I'm going to create the second link. Be ready, guys. As soon as this call ends, I will send a new call. Okay? I want you to prepare your questions and let's go for the second call. Is it good, everybody? Tap zeros in the chat, please. Tap zeros in the chat. I'm going to create the second call. Great. Let's go for the second one. And then after 30 minutes, we close this and we're good to go. Okay?